All right. All right, so you can see my screen.
Yes.
All right, I'm outside today because they're doing some plumbing and stuff. They still haven't finished yet, so they're making a lot of noise inside.
Okay.
Pull this. Shut up a little bit. All right. Okay, so back to your questions. Give me once. So your question is change back to the candles. All right, here's the main reason why I changed back to the candles. The institutions. The institutions. Because as you can see, even with the video that I posted the other day, as you can see, they can make decisions in a matter of seconds, and we have to catch it. Now with Hakinashi, I love Hakinashi now. I love it. You know what I'm saying? So when we do, I use Hakinashi when we're doing mostly our swing plays or our long plays, because that smoothness to show off, okay, it's going to continue to that path. But as you can see on a daily basis, shit change.
Mm-hmm.
Shit changed. Like I post, Tuesday was red and Wednesday was, Monday was red, Tuesday was green, Wednesday was red. And, you know, all of a sudden it just keep bouncing. It's not a consistent thing anymore. And we have to catch that. And the reason why I switch back to the regular candlestick is to catch those impulse moves where either we can get in and get out right away.
Okay.
You know what I mean? And even with today, with the one I posted today with the which one did we win off of today?
You posted UPS and Google, I think.
Yeah, Google, it was an impulse move. It was, and I had to wait basically all day to get that move.
Okay.
You know, right now I'm not going to jump into a play anymore like I used to, because now these institutions are getting kind of witty with it and finding out what we're doing, and we just going to have to catch it real quick. And this is why I jump back to the regular candlesticks, and it helps me identify the candlestick pattern where we can get in and out fast enough where we can make some money.
Okay.
That's the only thing, because yes, with the Hakinashi, don't get me wrong. Let's go back to the Haki. I love the Hakinashi now. It's really smooth and stuff, but there's a lot of things within that we cannot catch right away because it's so smooth. The Hakinashi is so smooth where it won't see that little impulse move where, like right here, it wouldn't catch that impulse move where if we jump back to here, you see how it went down and went back up, we could have caught that retracement right here and went up. With the Hakinashi, it was just a smooth thing where you're thinking, oh, it's going to go down, and it'll mess us up right here because you're thinking, oh, it's going to go down, we're going to get out of it. Where the regular candlestick showing, yes, it went down, but then I'm showing that doji candlestick here where it's a reversal and it went back up. Not only that, these are preset lines that I had back in when I set my dailies up. Set my dailies up, and I set these support and resistance lines, or even key level lines, to show exactly where everything is heading. Okay, here's a good thing too with this. You see this is the double bottom. I'm showing a double bottom here where actually by next week Google is going to pop. This is another key indication. If we were in the Hakinashi, it wouldn't really show that much. It would show it a little bit. Yeah, we see the double. We would see the double bottom, quite clearly. But then right here, you're thinking that it's going to go down more. Where look right here. I'm gonna show you something. You see right here the RSI. Look how it's going to change. Okay, see how it went down more?
Yeah.
I'm showing that for a fact it's going to go down a little bit, probably the first couple of hours of Monday, and it's going to shoot back up. Why? Because of this candlestick pattern that's showing right here. All right, it wants to go up, but the institution is fighting it down. So I went back to the regular candlesticks just for that, just to catch these impulse moves that the institutions are doing. We have to catch them. We have to catch them quick.
Okay.
Okay. Now,
Okay.
also because we're doing the 5-minute orb, we definitely need to use the regular candlesticks just to catch that boom impulse move.
Okay.
All right. Now, here's what I want you to practice or learn, or even go back with these particular plays or tickers. Okay. I want you to see exactly where the 9 and the 20, if it's underneath, remember, if it's underneath any of these or all three of these, that's a strong downward trend. So if we were to open up today, looked at Google, open up, well, I wasn't even looking at Google today. I was eyeing SPY all day because I wanted to make a power move on SPY, and it was just acting up. But if we would have saw this after the second candlestick, okay, second candlestick, everything, all three is below this. So this is a strong move on a downward trend. Actually, the move, we would have saw this move yesterday, right here, when it crossed over downwards. If we would have caught it here yesterday, by the end, we would have known for a fact that it probably would have went down some more.
Okay, I see that.
Now, only thing I want us to use right now with the 5-minute orb is the RSI.
Okay.
Okay, RSI. This line is very important. Now, what settings do you have your RSI on?
Let's see.
Or you could probably
copy. It's a standard, is what it came with.
Okay, the 14.
14 SMA, 14.2.
Okay.
Yeah.
All right, so you got the standard deviation. Perfect. Perfect. What I want you to catch, here's our play. Here's the plays that I watch and try to get in as soon as possible. Okay. Number one, everything, depending on if it's an upward trend or downward trend. Of course, it's in a downward trend. There's 3 key factors. This is the orb. This is the open breakout. The first 5 minutes, this is what it is. Okay, in that particular box. Number 2, all the SMA lines are underneath the candle. So you know for a fact this is going to be a nice, strong downtrend. Okay.
Okay. The candles are underneath the SMA.
Yeah.
Okay.
But you know for a fact it's a strong downtrend, at least for 45 minutes to an hour. We're trying to catch some money. And that's what we did today with Google. We got in for about 20, 30 minutes. We got out 80. I think she got out with 80% profit. I got out with like 135% profit. Okay. And so forth. Okay. That's what I want to see. Number 2.
But wait, you guys play calls on Google, right?
Yeah, we play calls. We played it. We played it around here for a few minutes.
Okay.
About 30, 40 minutes right here from around, when did I call that play? I'm going to tell you right now. Yep, about 12:49. I posted around 12:49. So caught it right here. So I caught that bounce. See that bounce right here? It bounced it off this SMA line, this 14 SMA line, and shot back up. So we stayed in it for about 15, 20 minutes before.
Now that because it's still under the 5 orb, but is it because the candles are now are crossing on top of the SMA line?
Are going up, yes. That's what I want to show you. It has to be strategic. You have to look at all factors before you get into the play. Remember, confluence, everything has to line up. Okay? This lined up, number 1, it's below the orb, the open breakout price. So it's below that, that's 1. You always wait for the second close, the second candlestick to close to go in. It's underneath, right. That's 2. Number 3, the candlesticks are below the SMAs. So that right there is an indication of a downtrend.
Okay.
Okay.
So put. Okay.
So yeah, puts. That's a put right there. All right. And what you want to see also, key in this black line. Is yours black or
Mine is purple.
purple? The SMA
Yeah, because
line?
I have a black screen.
That's right. That's right. All right. And the SMA line is what?
Yellow.
Yellow? Okay.
Uh-huh.
Is it?
Mm-hmm.
Yeah.
Oh.
Yeah, it is. It is. Okay.
Mm-hmm.
Perfect. So right here, this is how we would got in a nice play. Right here at 940. Okay. Once this RSI line is below the SMA line, that is another strong indication, of course, for a
Put.
downtrend. Yeah, for a put. So everything is lined up. You still don't want to go in because this could retrace on you and go back up. So you definitely want to make sure, always have some type of assurance that yes, it is on a downtrend. So everything is lining up for you. We would go for a put here, enter here, and we would stay in probably for right here. So about an hour or 45 minutes from 9:45 till about 10:15.
Okay, so looking at that, Gabe, why wouldn't you get out when you saw the green candle?
Why would I get out?
Why wouldn't you have gotten out why wouldn't you have gotten out the put when you saw that big green candle?
Why? Because it's still under the SMA line.
Got it. Okay.
Yeah, it's still under the SMA line. If it had crossed, I would have got out. If this bad boy would have went up a little bit, I would have got out. Yes, we came in here. You'll be come here. You'll be thinking it went back up, but I'm looking at this, it's under the SMA line. And I'm saying, okay, if it crosses a little bit, and I always punch this up just in case. I wouldn't look at anything else, but when it's starting to cross, this is when I blow this up and just watch it. I watch it, and if it crossed like this, then I'll probably get out.
Got it.
Or if it crosses, here's another thing. If it crosses, even if it crossed, then I would look at here. I would look at the SMAs to see if it goes over the any of these SMAs. Okay. So this is when you say, okay, you know what? It's probably doing a retest. Let me stay in for a little bit. And if you would have stayed in for another 5 minutes, boom.
Bam. Yeah.
Okay. The only way that I would get out, of course, if it's over any of these SMAs and it's over the RSI SMA line.
That makes sense.
Okay.
That makes sense.
Let's go to another one. Let's go to MU. Perfect example. Same thing. All three under the SMA. This is the open breakout first 5-minute candlestick. Boom, boom, bab. Okay. I would have waited. I still would have waited here. Here's why. Because this became green. The second one became green. The third one became green. I wouldn't have got in because that would have been a fake breakout and it would have shot back up on us and we would have stomped out of it. I still would have waited to the second here, which is still good. Okay, at 10:10. Okay, you see that? It's under the SMA line, under the ORB, and it's also under the RSI SMA line. Perfect. Boom. We would have got in right here and we would have rode it all the way probably to here. Okay. We probably got scared. Oh, shoot, it's going back up. Let's get out. So from 10:10 to 11:35, about an hour and 20 minutes, we would have made some profit just like that.
Yeah.
Okay. So that's what I want you to concentrate on. I want you to look at Tesla and Google. That's what I want you to concentrate on for next week. Okay. That's it. Because those are the big money, those are the big money plays that we can, within 30 minutes, we can make some money off of like that. We can make about 200-300 like that in 30 minutes off of these plays. Okay. They have high implied volatility where we can get in and get out like nothing and make some profit. So that's what I want you to concentrate on tomorrow, this week. This week, I'm going to probably do a SPY week. I'm going to just concentrate and call and do calls on SPY. Okay. On next week. But the only thing is SPY is a little expensive for some people.
Okay.
You know, so I may change it, but if we can make some money off of SPY, if I can pop $500 for everybody each by next week off of SPY, then that'll help them build up their confidence where they can put more money in and so forth. Okay,
Yes.
but
Yes.
for us, you know, the Teslas and the Googles, those are the big money plays where we put $400 down. If we make it, that'll be an extra $400 or $500 in our pocket within 30 minutes.
Okay.
Okay, so that's the only thing, the only criteria that I want you to concentrate on the ones that I just explained to you. And the two stocks that I want you to concentrate on is Tesla and Google only.
Okay. Okay.
I'm probably going to tell that to Renee, but before anything, let's make it work. Because remember, look how we were doing, and I'm going to bring that back too. Look how we were doing the 10 a.m. 1 minute chart.
Yeah.
That thing was just blowing. I don't look out of 10 what we did, like 5 plays on, we lost one time, I think.
Something like that. It was a really good strategy. Yeah.
Yeah. So I don't want you to concentrate on that yet. I want you to concentrate on looking at the specifics. Okay, looking at exactly at the specifics. Do not deter from anything else, Eldora. Do not. I don't care if PayPal just mooned or Nvidia or AMD just mooned and stuff like that. I don't care. What we're going to concentrate on is what we can handle and what we can control.
Okay.
Because if somebody said, "Oh man, Tesla just or PayPal just mooned," shit, we too late. We're not in Tesla. We're not in PayPal. And if we would have got in PayPal halfway, we would have probably got stopped out. So I want us to catch it in the beginning.
Catch it in the beginning. Okay.
Yeah, we want to catch that bad boy in the beginning. So let's go to another pair. Let's go to
Tesla.
Tesla would have been rocky all day. I would not down to Tesla.
Okay, that's why I wanted you to look at it, because I'm looking at it. I'm like, okay, how would you have played this today?
Nope, we would not. We would have left that alone.
Okay.
Because I saw all this within the first hour and a half. No, that would have been sucky for us.
Okay.
Yeah, we'd have got stopped out because look, nothing is really above or underneath any of the SMA lines. Not yet until around right here, which is the second one from the orb. And once that happened, you see that doji, that Morningstar doji, that hammer doji. That's a reversal doji.
Yeah.
So we would have stayed in for about 10 minutes, got stopped out, and we'd have lost a lot of money.
Yeah. Okay.
Just like that. Okay. It looked good here. Everything is underneath here. It looks good, thinking it was going to go down. But if you would have punched it closer, you would have saw this little angle going up like this and probably would have got stomped out.
Okay.
Yeah, that would have been too much for us just to look at, trying to concentrate and apply some type of play real quick. Yeah, it would have been too much for us.
Okay.
Too much.
Okay, look at Microsoft then. Microsoft was one that was kind of trading heavily on the other platform. And so I thought Microsoft was going to be a call, but now looking at the way that you're showing it, puts were the way to go on Microsoft.
Yeah, puts were the way to go. If we would have caught it, the second one here at 940, would have caught that. It's under it's under the RSI SMA. It's under the regular 3 SMA. So that would have been good. The only thing we would have to worry about and watch is this candlestick, this hammer candlestick, which is a reversal. All right, at the bottom, then it went up. Then another hammer, upside down hammer, inverse hammer. That's a reversal candlestick, and it went down. So, but we probably still would have been in this play. Why would we still be in this play?
Because it's under the SMA, is under the RSI, and all the candles are under the SMAs at the top.
Beautiful, right? So the orb. Oh, don't forget the orb also. It's under the orb. It's under the orb. It's on
Now, what
all
is your red line? I only have 2 lines. Why do you have 3?
this
What is
here.
those 3? You have 3, I only have 2.
I put the 200 in there as a resistance or support.
Oh, you have the 200 in there. Okay.
Yeah, you don't have to have the 200. It's not a factor.
Okay.
But for for me, you see how it never touched, it never went over the 200. So we probably still would have stayed in there because it never went above the 200.
Okay.
The only way we would have got out is probably right here, but we still wouldn't got out because everything is under the orb and the SMAs.
Mm-hmm.
We probably would have got out here because that strong uptrend right here, plus the volume. Definitely have to look at the volume too. So that right there would have probably got us out. But from 940 to 1130 in Microsoft, that's probably $200-300 here.
Yeah.
Okay. So we want to capture the big ones, the Googles and the Teslas. These can make us quick money because of the implied volatility that they do have. So even you and I will focus on that also. I'll put the regular plays in the room, but then I'm going to show you, and matter of fact, I won't even say nothing. I want you to tell me, okay, what do you see? Once I text you or something like that, or say it in the room, what do you see? What do you see? And I want you to tell me exactly what you see just by looking at the chart and looking at the criteria that we need for a play.
Got it.
All right. Let's look at some other ones. Let's look at an uptrend. Let's look at some. Okay. Exxon Mobil.
Okay.
So Exxon would have been an okay play to play. It would have been probably scary a little bit, but we probably would have got in right here at 950. Why? Because it's above the orb. It's above all 3 SMA and the RSI MA line. So everything is above.
Yeah.
Mm-hmm.
Yes.
So that right there is an indication to go for a call. So we would have got in here. We wouldn't have got out here. Why?
Because it's still above. The RSI is still above.
And then what else?
The candles are still above.
What else?
Let me see. And it's above the orb.
Correct. So it's above the orb. It's above all 3 SMA lines, and it's above the RSI line. It's above the SMA line for here. So we would have stayed in here until we would have saw some type of crossing. Okay. Even when we would have saw this crossing, we still wouldn't have got out yet because it's still above, unless it would have touched here. But we probably would have got out here because remember, we would have got in here around 81.79 or so. Mm-hmm. And around $82 or so, we would have got out.
Okay. Now, in your experience, so like you're saying, get out, wait until get out. Would you have lost all your profits by that time?
From when? Right here?
So when you got in and then you're waiting for it to kind of touch that SMA or go under that SMA, would that have just wiped out all of your profits?
No, not necessarily, depending on the theta that we use. Okay. One more thing too, I forgot to mention. I want you to absorb or look at the 30 minutes. This will help too. Because the 30 minutes in the hour, it basically shows you what's going on in the future. Always remember that. What's stated, you see how, let's say if we would have got in around, what I said again, let me go back to the
9:30.
Yeah, if we would have got in around, 950, I would have still been watching this, right? But then just in case I want to get out, just in case I see something that I don't like, I would go to the 30-minute just in case and look, okay? So 950, this is 10 o'clock. Okay, everything is good. Everything is good. Okay, I'm maybe losing some money, but yet it's still not touching here. But then when I saw this reversal candlestick, this hammer doji, I would have been safe and right. We would have been safe all day, actually. Wow. On Zom.
Yeah.
Zom
Yeah.
rolled all the way up today. Wow, from $81 to $84. So that's a $3 move. Nice. Nice. Halibut. No, Halibut. Let's see. Go back to the 5-minute. Halliburton. That would have been sketchy. I wouldn't have stayed in there because it crossed right here. But Zom would have been nice. Neo too.
Yeah.
Neo would have been perfect. You see how it's try to fight back up here? See,
Mhm.
if we would have came here and it would have fight all the way back up, we probably would have FOMO'd and got out, right?
Right.
With a loss. But again, if it's underneath all this, I wouldn't worry that much until, and I'll go back to the 30-minute. Let me see, this is 10 o'clock. I go to the 30 minutes and see where it is. See how far down underneath it is on the 30-minute time frame. I was like, okay, we can stay. We can still stay in there.
Okay. That's good to know, because what I have been doing is once I'm in, I'll switch to the 1 minute. And you know, the 1 minute moves up and down, up and down, up and down. And that's how I get in and out of play on the 1 minute.
Now, yes, when we get into a play, yes, we definitely could use the 1 minute by all means.
But I like how you just went to the 30-minute and you still see that it's trending down.
Mm-hmm.
So would the 1 minute have like scared us out of the trade?
Absolutely. Yeah. Yep. The 1 minute, you see how it's all over the place?
Yeah.
Went up, down, it's above, it's below, above, below, above, below, above, below. So yeah, it would have scared us like crazy.
Yeah.
But remember the 30 minutes will tell you the overall trend.
Mm-hmm.
Okay, remember, this is the overall trend. So the trend is your friend.
Mm-hmm.
So even if you have to do something like this, or even like this for before, let's say last night, we would have put something like this together, right?
Mm-hmm.
We know for a fact that, and I can do this. I can go further as far as going. Matter of fact, let me take this out. Let me show you something else. Oh, you never saw Michelle? Oh.
So who?
Michelle, my lady.
No.
She was just here outside with the dog. Let me tell her to come here. Okay, so let's say for Monday, right? So this is Neo all day today. Okay, so what we would have looked for Neo is the trend continuation. Now, of course, before anything, I definitely would have liked to look at the day, see what the day looked like. And of course, the day shows it's still on a downtrend, no matter what. Okay.
Okay.
So, ooh, you know what? I just saw something. Boom, boom. It might go up this week. Yep. It will go up this week.
Why? What are you looking at? Oh, it touched the bottom.
Mm-hmm. You see how boom, touched that, went up, boom, and went up.
Okay.
All right. One of the things I want you to concentrate on too is setting key levels and saving them, because that'll help you a lot.
Mm-hmm.
You see how this line here, that's a key level from, I think, from previous couple of months ago, that I still had here, because it is beneficial for you to know exactly where it's hit before or where it broke through or broke up from previously.
Yes.
And you can see here, it's been trying to do all of that. So now another key level, matter of fact, I'm going to do this right now with you. Another key level I'm going to set is right, let me bring this up. This is another key level that I spot. So I'm going to save that. I'm going to save that key level for future reference. So I know for a fact, if it bounces off of here, it's going to go up. Okay, so for Monday, here's what we're going to, well, we're not going to go into it. Matter of fact, let's do this. Let's forget about Neo. Let's go to Google. Okay, so I already set Google up weeks ago. All right, and it's been doing exactly what it's been touching certain lines and been rejecting it. It's been trying to break here and it reject that day, February 24th. Then see, it moved up. Good. So now what it's trying to do now is to go below this 2643 price range. So it's been trying to do that and it bounced up. Been trying to do that, bounced up. It's been trying to do that. And I suppose if this doesn't break tomorrow, it's for puts, it's going to bounce up. Okay.
Okay.
So here's what I'm going to do. I'm going to look at the 30. I'm going to set from where opened here to here. Okay. I'm going to save that. So what I'm going to look for calls or puts is that tomorrow, of course, with pre-market, we can't do nothing about it. So of course, pre-market is going to tell you at 9:30 is going to tell you if it's going to be above this line or below this line.
Okay.
All right. So for instance, let me show you another way. So if we would have set it Thursday, right, from here to here, Thursday, you see how the opening breakout, it never went up. It never passed the previous day price range. Okay. So Thursday, we would have said, you know what, Eldora, if this goes up, we're going to do calls. But if it stays below this line, we're going to do puts. And when we opened up, what happened? You see how it stayed below that? Boom. So that's what we're going to concentrate on and showing you how to do. So now for Monday, that's what we're going to concentrate. If it breaks over this line, definitely for puts. I mean, for calls. If it remains underneath here, definitely for puts. But the criteria have to be met before we enter. But we're going to, the first criteria, of course, pre-market may tell us, let's go to pre-market. Let me see something. What pre-markets is telling us right now. Or aftermarket, rather. So aftermarket is telling us, let's go to a 5-minute. Aftermarket is telling us right here, you see that gray area? That's the aftermarket. So the aftermarket is telling us that it's may remain under this, but pre-market might change everything.
Right.
Okay, so right now aftermarket is telling us, yes, it may call for puts, but pre-market come, and if it goes above this particular line here, we're gonna concentrate and look for calls.
Okay.
But again, before we go into calls or puts, those criterias of the orb, the opening 5-minute orb, okay, the SMA lines, the regular SMA lines, and the RSI SMA lines to see where they are before we enter a play.
Okay, got it.
Okay, and that's
and when you're in the trade, because I've taken the extended hours off, correct?
Absolutely, yeah. We definitely we don't use the extended hours because that would mess us up.
Okay. Okay.
All right. So this is what we're going to look for Monday.
Okay.
Okay. Remember, keep it. If you can draw it, I want you to draw it just like this when you go into your charts. Review the chart or review the video and exactly where we set our marker, our trend line.
Okay.
But the overall, where's that trend is heading? Right now, the trend is like in a downward trend. So it might bounce off of here and go down, or it may push up for calls, but we have to see. Everything right now is telling us that, yes, it may go up, but with pre-market and aftermarket after hours, we don't know yet. We just have to wait until 9:30.
Okay. I see that.
Yesterday, it would have been perfect. If you would have told me yesterday we would have played it today, we would have made some great games. Look at this. You see that opening? All the way down to the close, right? It never went above that. It went below it. So that right there, we would have placed some puts and made some money off of this.
Yeah.
Just like that. You can catch it, but we just basically have to be patient right now. We have to be very, very patient in our plays because these institutions right now are manipulating the hell out of certain stocks. And and like for instance, like SPY. If they manipulate SPY, they manipulate Google, Tesla, Microsoft, Nvidia, all of them.
Yeah.
So we have to basically watch it and make sure that all our criteria are met. Once it's met, we just follow the money.
Okay.
Remember, that's all we want to do is follow the money. So if you want to start Tesla like this, by all means.
Okay.
Okay, Tesla and just Google. These two, Google and Tesla. That's all we want to do. And then save it. And then we can go back to it or even make some notes on it. If you want to make some notes, that's perfectly fine.
Okay.
Make some notes so you can remember. You don't have to jot anything down. Everything, once you do that, click on Google, the notes will pop up right there waiting for you.
Okay. Now, this makes it a lot cleaner because I had the MACD zero lag. And so I was looking for all three of them to match. And it's hard for all three of them to match up. And it's like, okay, wait, the MACD is turning red, but then this is going green. And this, so yeah. So this will make it a lot.
Now, don't get me wrong. The MACD, the zero lag is good. But now when we want to get into longer certain plays, yes, that's when the MACD will come in effect as far as, swing plays and everything like that. But right now, I don't even want to do swing plays because we getting fucked like crazy.
Yeah.
We getting fucked like crazy because they know exactly what we're doing.
Yeah.
They know exactly. And see, if we would have got, let's say if we would have said, oh man, this is going up. Let's do some calls at 3:30, 3:45. And then when you look at aftermarket, after hours, look what they doing. Boom, they shorten it.
Yeah.
They shorten the shit because they know for a fact, we're gonna thinking that okay, Monday is gonna open up, we're gonna skyrocket, but right now they just shorten the shit out of it right now.
Yeah.
And we cannot do nothing about it.
Yeah.
That's the sad part. We can't do shit about it.
Yeah, that's the sad part. Yeah. Yeah.
So they know what we're doing and they're doing the opposite.
Yeah.
They're doing the exact opposite. Let's look at 5 minutes. Yep. Look at that. They knew. See this last candle here? We would have got in. Oh yeah. We swing play. Boom. Yeah, swing play. We're gonna go good. But look, they're just shorting the shit.
Yep.
They just shorten it all day until now. And the real market won't close until 8 o'clock. So if you look back at 8, this might go down a little bit more because they're shorting the crap out of this shit.
Yeah.
Fucking us up. And even
here. Oh
here.
my God, it's rough. Oh my God.
What happened?
No, I'm just saying it's been rough trying to, trade because you think it's going one way, all the signs, then it reversed. But this should help clean it up a little bit for me next week.
Yes, absolutely. I'm going to be there with you all the way. Trust me. Okay. We're going to do this together here because, like I told you before, I had to change the strategies because of these institutions. I knew that a long time ago before the video how the institutions fucking us up.
Yeah.
They're manipulating the shit out of this. And the problem is they have the money, they can do it.
Oh, yeah.
They have the money. No, we don't have the billions where we can say, hey, all right, let's do this, boom, at a drop of a dime. We don't have the billions. They do. So we just have to follow them and follow the money.
Yeah. Yeah.
Unfortunately, so we're going to get it right. I'm going to make sure you get it right. And even right here, what do you see here in the 5 minute?
On Google on the 5 minute?
What do you see right here?
Let's see.
I'm going to blank it out for you right here. In this yellow box, what do you see?
It's still under the orb.
But just by the candlesticks, just the candlestick. What do you see? 5, 4, 3,
you get
2,
on my nerves.
1. Double bottom.
What do I see? I mean, I see a lot of noise. I mean, it's going down. It was on a
Double bottom.
downtrend.
Double bottom.
Oh, you know what? I can't spot those like that. The double bottom.
Double bottom. Right there.
Double bottom.
That can help our trade see hopefully if it goes up. But yeah, you definitely try to have to spot, just try to spot certain things. If you can spot them, then that'll be easier too to get in a particular trade. So we just have to try to spot them just like that. That's the 5 minutes. So that'll help for the morning. But this, if it breaks, of course, we're going to go for calls. And if it doesn't break and go down, puts. But I'm sure this is going to be a put. I'm thinking it's going to be a put. Because if we would have did this yesterday and did the same exact thing that I'm doing now, and it's underneath here, that'd have been sweet. That would have been a sweet day for Google. That would have been about $600-700 for us.
Yeah. Because it could be trying to make a triple bottom. You don't know.
Yeah. But I know for a fact it might try to touch here. If it touch here tomorrow, Monday, it might go up, break. But we have to set our limits. We have to set our parameters. Okay. The only time we go into play if it breaks or rejects this parameter. Don't look at nothing else. We have to set our support and resistance, our trend lines. And once it breaks our, whatever we want it to break, then we go in. Okay. So I wouldn't even trust this yet because it looks good like a double bottom, but then right here looks like it's going down because of the freaking institutions. But if I would put the regular extended hours in, you see how that down one
looks like put.
Yeah, see how it was looking like it was going down anyway, and they took it down. Bastards.
Yeah.
Just like that in 2 hours. This is why I hate them. This is why right now I'm not calling plays until I see a solid setup. Okay. Setup has to be right. I cannot afford for anybody else. You know what I'm saying? Everybody to lose a lot of money right now. Any money, period. So I have to find the right, even for me, I have to find the right setups. And I don't do anything else but look, try to look at some of these here. But I look at these top. I look at here and then, try to go into trading flow and see if I can find some good setups too. This helps a lot. Trading flow definitely helps a lot. Damn, am I that black?
You're so funny. You stupid.
Dang.
Oh goodness. No, I appreciate this. I will try this on next week. If that shit don't work, I'm gonna be like, you know what? Peace, deuces. I'm out.
No. Even if I gotta fly to California to sit with you and we trade, we're gonna trade.
Oh my goodness. Okay. I will study this weekend and I will be ready for Monday.
All right, girl. I'm gonna have this give me a few minutes. I'm gonna have this up for you shortly.
All right. Thank you so much, Gabe. Tell Michelle I said hello.
You're welcome. No problem.
Okay. All right. Bye.
Bye.